Hello and welcome to this week's Questioning the Manager. It's a bit of an election special. It's the day after the election and we've got Job Curtis, Fund Manager of the City of London Investment Trust. It's over 1.3 billion in size and it invests mainly in large cap UK equities for income and growth. Job, welcome to Questioning the Manager. So it seems we have a hung parliament with Theresa May likely to form a government with the DUP. So has this been very positive for UK markets and also consumer confidence?
Well, obviously there is uncertainty because the Conservatives didn't win a majority, so we are in a hung parliament, and so there is political uncertainty, particularly with all the challenges we've got ahead. But I think the public's been proven, UK consumer very resilient. I mean, Brexit referendum was a surprise and people predicted that it would shake consumer confidence, but actually confidence bounced back and has proved very resilient since the referendum a year ago. So, I have confidence going forward.
So does this change your view on portfolio positioning?
Well, City of London is predominantly in large international companies which are listed in the UK. So these global companies aren't really particularly affected by what happens in the UK. The UK is part of their business, but they are global. They're in America, Asia Pacific and across Europe. So the heart of my portfolio of City of London's portfolio are these companies, and so they won't be affected. But I have also a lot of confidence in the domestic stocks that we own. We've got some very good quality house builders, for example, or stocks in the leisure sector where I'm very confident of their prospects going forward as well in these more domestic stocks.
Job, around 11% of the portfolio is invested overseas, so does this mean that you're finding it hard to find UK opportunities?
No, we are a UK equity income fund and we always have over 80% of our portfolio in the UK listed stocks, although some of them are kind of global companies by their nature. But sometimes we can find stocks overseas where you can't really find the equivalent in the UK. I mean, a very good example, a stock we've held for several years is Microsoft, which has done very well and is a good dividend payer, very strong balance sheet, and you just don't find the equivalent stock in the UK. So where we can see those sort of opportunities, they are sort of icing on the cake in terms of the portfolio.
Job, the City of London has a very good track record of consecutively raising its dividend, of course not a guide to the future. So can you explain what you look for in companies that enables you to be able to pay this strong level of income?
Well, the dividend on its own is not enough. You also need companies that can grow. So we're looking for companies that can both pay their dividends and invest enough for their future growth. So it's that combination of growth and dividend or income return that produces a very good total return. And so it's companies that can grow their profits as well as their dividends. So that's a critical thing for us.
Job Curtis, thank you very much.
Thank you.